everybody, what's up? We are back with another stock analysis, and today we are looking into Dollar General. They just released their earnings this morning. As far as I know, they are positive, fairly positive. Haven't looked into it yet, so this will be completely a first look. They are up 7.5% at the moment, which is awesome. So we're going to be getting into that, seeing what's going on with the earnings report, giving probably an estimate of where I think the stock is going. And yeah, so if you're interested, make sure to subscribe and let's get into Dollar General. So, getting into Dollar General, I am just going to go right into the earnings here and see how things have been going. So, from what I actually read, they lowered guidance and they missed on earnings. However, they beat slightly on revenue. Um, so it's kind of a mixed report here from what I could see. Lowered earnings is almost always bad. So seeing that is kind of shocking, or sorry, lowered guidance is almost always bad. But overall operating metrics, comps came in above, gross margin came in slightly above as well, estimates at least, uh, almost matching a year ago. SG&A was significantly higher actually, and that includes a charge related to store optimization. So that is fairly okay. So it's unclear if it's actually comparable at the moment. And then again, another thing with the operating margin. So they did a fairly large investment into their stores over the past year, as far as I'm aware. Merchandise inventories actually fell. However, sales went up, which is pretty good, I would say. That's not really a negative. Inventories falling isn't really a negative too much, considering sales have increased. So either way, I would say that's fairly good. Let's take a look at the entire, or at least the summary of the report now, and see what's happening here. So operating profit decreased. Fiscal year operating profit decreased as well. Um, Fourth quarter EPS decreased 52%. Oh my God. Which is not great at all. Board of directors, okay, so they're still doing the dividend, which is good. Annual cash flows from operations did increase 25% though, so that is a positive. Let's read through the summary here. Pleased with the performance of the business in the fourth quarter, including improved execution and solid top line results. As we reflect on our full year, we believe our back to basics work is resonating with customers, demonstrating healthy market share gains and higher customer satisfaction. So overall, I think it's not bad, but also the EPS falling that much seems a little bit concerning, especially from a valuation standpoint with the company. Net sales did increase over the quarter by 4%, which is pretty solid, a fairly good year over year gain. Um, Positive sales contributions from new stores and growth in same store sales. Let's actually take a look here and see. So, same store sales percentage did increase 1.4%. For, I believe this is their most recent report right here, these numbers. Net sales per retail square foot is at 263 selling space. I wish they had more of this data to look back on and kind of compare it to, but either way, they did open about 600 new stores as well, which is honestly awesome. Um, Great for future revenue growth. Either way, moving on. Fiscal year, let's take a look at that. So, decrease of 32% net income compared to the year before. That is rough. EPS decreased obviously the same exact amount. Reflects negative impact of approximately 81 cents per share in the fourth quarter related to the store portfolio optimization. So I feel like that kind of what's the best word for it? The strategy that they're doing with optimizing all of their stores over the past year has kind of had a fairly negative effect on their financial results for the year, but I feel like going forward in the future, it'll have a much larger impact. Um, and even still, the stock is up 6% today. Still, it was up at the highest 8.5. It's now up 6%. So people are viewing this positively. I think it's more on a mixed kind of viewpoint at the moment. It is, to be fair, dropping now. Right after open, right now is about 10:30. They peaked at right about 10-20 minutes ago, and now they're already down another 3% from where they were. Or actually, now it's about 2.5%. But either way, um, store portfolio optimization review. So this is actually very important. Dollar General and Pop Shelf bannered stores, which involved identifying stores for closure or re-bannering based on an evaluation of individual performance, future performance, and operating conditions. As a result, they're closing 96 Dollar Generals and 45 Pop Shelf stores, and they're converting 6 Pop Shelves to Dollar General. Operating profit for the fourth quarter includes those charges, okay, which is a fairly negative impact, primarily due to these store closures as well as Pop Shelf impairment. As we look to build on substantial progress we made on our back to basics work, we believe this was appropriate to further strengthen the foundation of the business. So I think the reason the stock is up is mostly because they are very clearly taking steps to improve the core business, which is honestly pretty good in my opinion. The results were either way fairly decent. Obviously, some margins dropping isn't the best thing you want to see, but overall, I would say it's not that bad. Excuse me. And let's also see, so 2025 financial guidance and outlook: sales growth in the range of right around 4%, which is kind of slow. Same store sales to right around 2%, 1.2 to 2.2%. EPS is just about in the same range as we've been seeing. And then other than that, just CapEx right over $1 billion. Reiterating plans to approximately 4,800 real estate projects in 2025, including 575 new stores and 15 new stores in Mexico. So that's is something. 2,000 stores are getting fully remodeled, and 2,200 are being remodeled through another project that they have. So there's massive steps being taken. I mean, the costs for this alone are going to be enormous, but the steps being taken to kind of revamp their business are very clear, which I view as a very positive sign. Obviously, they are kind of going through a restructuring at the moment, and seeing the steps that they're taking to do this, in my opinion, looks very promising. If we go into the chart here, we can see how they've been performing. So first of all, Dollar General is down just around 50, oh God, way more than 50% from their all-time high. Let's find out the rough range of this here. So right now they're just about 70% below their all-time high. I really think that they are due for a comeback soon. This company has a massive footprint in the United States, especially. We did see also they're expanding more into Mexico as well. And honestly, I think that there is a ton of room for growth here. You can see they've been in kind of a descending wedge for, let's actually just focus on this for now. They've been in a descending wedge kind of formation here for about a year and a half, roughly. And I really am hoping to see them break out of this soon. I think that will kind of solidify a possible future uptrend. Um, Either way, one other positive metric that we can look at here is that they have, even through the fairly large dips in the stock price here, they are still growing their workforce very significantly. 2024, they saw their workforce grow by about, or sorry, this is actually 2023. They saw their workforce grow by 9%. So we will actually probably be able to see in this year's fiscal report how much they grew by in 2024. So let's actually try to find that. So the 10K should be in here somewhere. And I'm going to go through the filings, honestly, because I really want to see if that is still growing. I think that's a very positive thing. And it looks like they're not really, might not have it yet. Earnings call might not be in here just yet because it just came out about an hour ago. which is fine. But either way, a lot of forward-looking statements. I am not reading through any of that. Oh, let's see here. So I don't know where it would possibly be. I don't even know if they would list it in here. Probably not. Um, Either way, moving on. Overall, I think the company is in a promising position. Obviously, we would have liked a little bit of a better report. Again, their EPS did miss massively, even despite the slight revenue beat. So the profitability is kind of suffering while they're going through this restructuring phase. Hopefully, that can start to turn around. This is now the third mostly negative earnings report they've had in a row. So hopefully, we can start to see the benefits of this entire restructuring pay off in the near future, but we'll just have to keep watching. I think we will start to see them gain a little bit more value as people are really taking notice of the steps that they're taking to improve the company, just from the core. So that will definitely kind of gain some confidence. I definitely feel a little bit better seeing that they're remodeling all these stores. So either way, that's all I have for Dollar General today. Thanks for watching. Make sure to subscribe